Nvidia under some pressure here, despite that upbeat earnings and the outlook for its first quarter margin did miss estimates. That's coming into focus, and we want to look at the stock's performance using some of the fundamentals as well here. Whereas technicals focus on timing and analyzing price movements to time market decisions, fundamentals, they focus on value and assess a company's financial health through earnings and revenue. Here to help me do just this, we've got on set Jay Woods, Chief Global Strategist at Freedom Capital Markets here. So Jay, there are three fundamentals that you're looking at around Nvidia. What are they?
Well, first was the earnings overall, but we look under the hood, we look at that revenue beat, which was good. They consistently beat on revenue, and we look at the chip, the Blackwell chip. People were concerned, is the demand still there? Jensen addressed that. The demand is still there. There were no snafus as far as deliveries go, so we checked that box. Revenue beat, Blackwell, things, looking good. So that was optimistic. The DeepSeek question. DeepSeek is the one question on everybody's mind. This is what drove the stock price down late January, early February to that 113 low. Is this competition good? Is it going to hurt their growth going forward? Jensen welcomed it. Did that resonate with investors? It doesn't look like it's eased anyone's concerns that this competition will be good. How is that China trade going to be going forward? But Jensen didn't say this was going to hurt them. He welcomes the competition, and he doesn't see it being a headwind. And then lastly was, that CapEx spending from its biggest, users of the platform, the Amazons, the Googles, the Metas. There hasn't been a slowdown. We saw that with their numbers. The projections, though, the guidance going forward, that has been the bugaboo for not just tech stocks, but all stocks. You look at Walmart, they had a blowout quarter. They guided a little lower. Nvidia, we're used to blowout quarters. We got it. This was fantastic. Was it as big? It was the worst revenue beat in 2 years, but they beat. And the guidance was solid. But what is hanging over this stock right now? It's tariffs. So when you look at Nvidia, the stock, phenomenal. It's a juggernaut. It's best in class. Its growth projections continue to be strong. What it made in the last year is almost what it made in the last 10, or its first 10. So we're seeing the growth, but it's not impressing the street, and we're concerned right now, and you see it in price action. As a technician as well, I think Jared did a great job of pointing it out. We are not rallying right now. We're kind of stuck in this level, right. And that call didn't give us that catalyst. So what is the next catalyst? In March, when he presents at his annual conference. So we'll see what he says then. But right now, investors are kind of like, all right, this didn't wow us,
sure,
but we're not panicking, we're not getting out, so we're kind of just stabilizing here, waiting on tariff news.
The commentary from UBS out this morning also kind of mirroring what you were mentioning here in the big four U.S. tech firms. They're all forecasted to grow by 35% in terms of some of the CapEx spending that's coming forward there. But that points to something else, which is the solid AI adoption trends. They believe it's going to continue to boost monetization here. How does that play into the fundamentals, and how much of that goes strictly to Nvidia versus the rest of the competitive landscape?
Exactly, and it's a competitive landscape. I think that is the key word. We're starting to see more competition, and then there's concern that this CapEx spending isn't getting the results that people want. They may have to draw down. What does that do to Nvidia's bottom line when their biggest customers are starting to wean back? So that is the cloud that's overhanging it. But when you look at the quarter, when you look at the results, they knocked it out of the park.
Yeah.
But it wasn't this blowout that was going to take us to the next level, because there's still too many concerns, geopolitical concerns, that are weighing over this stock. So when you go back, you look at the technicals, and that story shows that we're kind of in this no man's land. And if we do break down, as Jared pointed out, then you want to watch that 113 level, the lows we got after the DeepSeek news broke and took us down there.
Jay, thanks so much for joining us. Appreciate it.